What's up guys, Coverage Genius here, back again with another video. If this is your first time here, thanks for stopping by, I really appreciate it. And if you've been here before, well, you know how it goes. Welcome back. My goal is to help you navigate through insurance, investing, and personal finance to help you build wealth. I also sprinkle in a few topics that I'm interested about to make things interesting. So today I'm going to talk a little bit about car insurance basics, specifically liability insurance. Now, hold on a second, all right? Before you change to another video, just hear me out and listen for a few minutes. You might learn something important, and I might save you a ton of money and headaches in the future. So, getting the appropriate auto insurance in place is essential to manage your risk and to protect you, your family, and your assets. So in this series of videos, I'm going to help you understand what car insurance is and the different types of coverage that are available. For this video, I'll briefly define what car insurance is, and then I'll explain 3 different things. Number 1, what is liability insurance? Number 2, why your state's minimum is not enough. And number 3, my recommendations of liability coverage. So let's get started. Car insurance is basically a contract between you and the insurance company that protects you against financial loss in the event of an accident or a theft. If you own a car, or if you financed or leased a car, it's most likely that you are required to get auto insurance. So, what is liability insurance? Liability insurance covers bodily injury and property damage expenses to other people in the event where you are found liable in a car accident. Liability insurance does not cover damages to your car or injuries you sustain in an accident. You'll need full coverage for that, which I'll explain in a future video. Bodily injury coverage applies to injuries and expenses related to the accident and applies to not only the other party and their passengers, but to also bystanders and pedestrians. Property damage liability coverage includes coverage for the other party's car, but also includes buildings, telephone poles, and other types of structures that are involved in the accident. Usually this coverage is represented in a set of 3 numbers. The first number represents per person coverage, the second number represents per accident coverage, and the third number represents the property damage coverage amount that the insurance will cover. So, for example, if you have a set of numbers that are 100, 300, and 100, that means that your per person coverage is 100,000, your per accident coverage is 300,000, and your property insurance coverage is 100,000. Having the right liability coverage is a great way to manage your risk. If you have too little liability coverage and you get into an accident that's your fault, anything beyond what the insurance covers will be your responsibility. That can mean that your assets are up for grabs. This is why number 2, your state's minimum is simply not enough. I see so many people that have state minimums and they don't realize how exposed they are. They're only concerned with saving a little bit of money and are not looking at the bigger picture. If you have assets to protect, getting the state's minimum is simply not enough. What are assets? Assets could include your personal property, your home, any investment property, your wages. If you're found at fault for an accident, not only would you be liable for the physical damages to the other party's car, but also their medical expenses, pain and suffering, legal expenses, lost wages, funeral expenses. The list can go on. And with the costs of healthcare and car repairs going up every single day, it's easy to assume that the cost for this could far exceed any state minimum requirement. Which brings us to number 3, my recommendations. Now, I always recommend to my clients or prospective clients getting coverage of $250,000, $500,000 bodily injury, and $100,000 in property damage coverage. You know, none of us knows when an accident will happen, and we don't know whom or who is going to be involved or what things are going to be involved. So why not get the most coverage possible? Now you may say, oh, my insurance and premiums will go up, it'll get expensive, and I don't want to pay that much. Well, my response to that will simply be this, right? Any investment you make into getting more liability coverage far exceeds the amount of protection it will provide you and your family. And any premium increases for coverage are relatively small, so at the end of the day, it's definitely worth it. Now here's a bonus for you that a lot of people don't know. When you get the $250,000, $500,000 bodily injury coverage, you are now eligible to get excess insurance, or what we call umbrella insurance. Umbrella insurance provides you extra coverage when your existing coverage isn't enough. For example, let's say you get into an accident that's deemed your fault, and the other party experiences injuries that go beyond your $500,000 limit. Well, this is when your umbrella insurance will then cover the excess cost that is owed by you. It's just extra insurance. And for an additional $200 to $300 a year, not month, a year, you can get $1 million worth of extra insurance. So why wouldn't you get that? That's great, right? Remember, insurance is a risk management tool. It's really a hedge against the endless possibilities of what can happen to you and your family. It provides peace of mind, people. Peace of mind. So you don't have to worry. You can just go about your day focusing on what you need to do rather than worrying about what could happen and whether or not I'm covered. At the end of the day, I think you and your loved ones are worth it. Don't you? Thanks for watching, liking, and subscribing, guys. I'll have the next video in this series coming up real soon. Until then, I'll see you guys next time. Peace.